Rent growth levels have been consistently mild of late in the South Florida region, but not in Palm Beach County, which has topped the national average for annual rent growth in each of the past 4 quarters. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Metro West Palm Beach update. And let's dive right into the annual rent growth patterns in the 3 South Florida counties over the past 2 years. Miami-Dade in red has really cooled off since hitting 6.8% in Q1 2011, just 2.6% rent growth as of Q4 2012, even though occupancy remains tight there. Broward County in gray has been pretty consistently right around 3%, 3.1% as of Q4. And Palm Beach County is the only one with any momentum of late. Annual rent growth in the 4 to 5% range each of the past 5 quarters. So it's been the regional leader over that stretch, 4% flat as of Q4, and that was a full 100 basis points better than the U.S. average. And that's been interesting to see because when you compare occupancy rates in the South Florida region, Palm Beach County is where it usually is, dead last. Although we should say, though, it's moving in the right direction. Occupancy as of Q4 came in at 94%. We did see a little bit of a slide in the second half of 2012, but over the past 2 years, occupancy has climbed 250 basis points. And that upward momentum in occupancy helps explain the better rent growth, since when occupancy is trending up, operators tend to feel more confident in raising rents, even if there are still more vacancies to work through. And also remember that Palm Beach County is smaller than its neighbors, and so it tends to see performances shift more notably. By comparison, occupancy rates have been pretty flat over the past couple of years in Miami-Dade and in Broward. Miami remains one of the national leaders, 96.9. We talked about Miami in a video earlier this quarter and why rent growth has been so minimal despite having so few vacancies, and you can find that video on our website. And then there's Broward County, where occupancy has been at occupancy came in at 94.9%, which is roughly in line with the U.S. average. Now, there's another important factor to point out when explaining the better rent growth in Palm Beach County, and that's that strong rent growth hasn't been universal among the county's 5 submarkets. In fact, only 2 have produced consistently strong hikes. Here are the numbers as of Q4 2012 by submarket, and the 2 on top have been in those spots for a while. Big growth in Boca Raton, rents up 8% year over year, and a large increase in North Palm Beach County, 5.7%. Boynton Beach, Delray Beach had been doing better, but as of Q4, it slipped at 2.7% annual rent growth, and that was on par with Lake Worth, Green Acres, Wellington. And then the West Palm Beach submarket has been the consistent laggard. Rents there were up just 1.2% in 2012. So the big question for 2013 is, can Palm Beach County as a whole sustain strong rent growth? Well, it's obviously going to be tough to sustain that 8% number in Boca, but we are expecting to see improvement in most of the other submarkets in the county, and that should keep rent growth for the county overall right around 4%, probably just under that. And that wraps us up for Palm Beach County. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.